Man, oh man, what a day, what a day. Another great day comes to an end. Hope you guys made some money out there. Spend the morning, shorten those bull traps, and spend the afternoon trading that beautiful pop and grind reversal. Hope you got that first test to finish off the day today. Boy, oh boy, what a great day. Well, we're only as good as tomorrow's trades though, right? Back to work tonight. It's Wednesday evening. We got more trades to take tomorrow. As always, I'm going to cover all my favorite trades for Thursday in tonight's video. Then we get a game plan to make some money tomorrow. Before we jump in, we have a lot to cover in a very important video tonight. Before we jump in and get this party going tonight, make sure you subscribe to our channel, hit that notification so you always get notified when I publish something new. And if you guys enjoyed the video tonight, do me a favor, will you? Hit that like button, give me a holler, give me a shout out in the comments section. Always appreciate you guys tuning in, supporting this YouTube channel. So thanks for watching here this evening. But enough of the intro, right? Thursday is not going to trade itself. We got some more big news tomorrow. Oh, yeah, we got some more big earnings tomorrow. And I'll tell you, we got a lot of really, really exciting trading opportunities. Let's talk about that tonight. What's going on for Thursday? Well, of course, the S&P and the Nasdaq are pretty bullish right now, right? We talked about this. Boy, we kind of painted the whole game plan last night, and I wasn't anticipating that big collapse, obviously, that we got overnight, but boy, oh boy, the move down in the morning, the rip back up. Boy, if you watched last night's video, you were ready for it. Well, now we're bullish, right? Now we're very bullish. We've got some beautiful pop and grind moves right now, some spiking channels on the S&P and the Nasdaq, and so strong moves like this, we're definitely looking for pullbacks now. When it comes to pullbacks, there are three different types of pullbacks, and by the end of the video tonight, I'm going to teach you how to kind of time the perfect pullback entry using some of my favorite entry patterns. So we're going to cover those on the S&P and the Nasdaq. We also, of course, have potential for continuation because we have not retested that high yet. So we'll definitely talk about some breakouts going higher. I will talk about some reversals and how to kind of time a good reversal off the high as well. So boy, oh boy, buckle your seatbelts, kids. There are a lot of great potential money-making opportunities on the S&P SPY, NASDAQ, and the QQQs. I'll tell you, oil, you're going to want to stick around for the oil chart tonight. Oil has a very interesting chart tonight. It's a range-bound market. But I'll tell you, though, we've got some big airline stocks reporting tomorrow, big energy companies reporting tomorrow morning. And you might have heard they're sending tanks to Ukraine, a little bit of an escalation. Oil definitely should be on your radar for tomorrow. I'll tell you, I'd love to get some breakouts. I definitely see breakouts potential, but I really would like some bear traps on the oil here. I'll talk about why I say that and how to make some money on the oil for tomorrow as well. Now, speaking of tomorrow, before we jump in and get into all of these charts here for tonight, boy, a lot of news tomorrow, right? Boy, a lot of news tomorrow. Big cluster of news, durable goods, GDP. Those will be our big news reports tomorrow at 8:30 to kind of kickstart the trading session tomorrow in our trade room. Don't worry about trade or jobless claims. No one cares about that stuff. The new home sales number later on at 10 o'clock is definitely going to be something you're going to want to watch. I would definitely want to be, I would definitely be at your desk in that 10 o'clock to 11 o'clock hour. We oftentimes see the best trades in our trade room between 10 o'clock and 11:30, 11:45. So definitely keep those two items on your radar. And of course, don't forget, we are still battling through the earnings season. We're about halfway through at this point. I'll tell you, if there's one thing we've learned over the past couple days, as I've said repeatedly on this video, right about we talk about earnings, one thing we've seen is it does not matter what these earnings are coming out with. Trade the chart, trade the chart. We've seen lots of different earnings come out, some good, some bad. And boy, I see a lot of people in the comment section really overthinking this stuff right now. So I'll say it one more time. It does not matter. We know there are earnings coming out after the close. We know there are earnings before the open. Trade the chart in front of you. Please don't overthink this. And again, be careful around the overnight here because of those big moves we're seeing in the low volume earnings. Anyways, that's a schedule for tomorrow. 8:30 news, 10 o'clock news, a bunch of earnings. But again, trade the chart. If there's one thing we've learned so far this week, the chart tells us everything. The news is noise. Anyways, I'm off my soapbox. Now, I'm going to cover all my favorite trades across all three of these charts here tonight. If you like making money, make sure you follow along the entire video tonight. Every setup that I talk about here tonight can be applied to your favorite market. So don't just click off after your favorite chart, because every trade idea I talk about, it can easily be applied to your favorite market. So let's go right in. We'll go S&P, NASDAQ. We'll wrap things up here on the crude oil. Now, first of all of these are tick charts. You can see these are 8,000 tick chart. They'll all be tick charts in the upper left-hand corner. This is the 21 EMA. And also be aware, too, the S&P, the NASDAQ are very, very similar. So what I talk about on the S&P can be applied to the NASDAQ. The NASDAQ can be applied to the S&P. So again, everything we talk about right now can be interchangeable. So don't just watch your favorite chart. It can all be applied to your favorite market. As always, I will drop in some extra chart time frames in the description of the video. Right now, we've got some 4-hour charts, some 60-minute charts that are really a good complement to this time frame in front of me. So definitely grab those links. The description, they'll go right along with what we're talking about here tonight in the video. All right, let's dive right in. There's a lot going on the chart right now, but the most important thing that you want to be aware of is we do still have an overall bull bias. So that is going to be the lens that I look at this chart through today, right? 60-minute chart. And again, you'll see in the description, got some slower time frames there. Very much a bull market right now. And then really the key here is we had that big range, right, from yesterday. And as we always talk about, when markets go down and then rotate back higher, there's a lot of momentum, right? What happens when markets have ranges like this, we're bullish in a range. When we go down, right, we oftentimes will punch and just blast right through. And oftentimes that momentum coming off that low is good for some breakouts. So we're right about here, right? We're right about here right now. So we've got more space to go back to retest the high. And if the buyers have it their way, they'll punch out and take out some of these highs up overhead. So a lot of bullish momentum right now. And like I mentioned in the introduction, buyers have a lot of different ways to buy right now. One really big clue is this kind of pop and grind, right? That pop and grind channel that we talk about. I can mark off that high, mark off that low. If I had it my way tomorrow, you know, if the trading gods are looking down tonight, right? If they help me out for tomorrow, my favorite trade tomorrow will be a pullback off the low of this area here, right? Get some bear traps in this area, because that's going to give you a nice small risk for a nice big reward, right? If I had it my way, that'd be my favorite entry for tomorrow. But another really cool clue on this, and again, this applies to the NASDAQ as well, is it's also a spike and channel. You can kind of see how it kind of pops up and starts to channel higher here. Spike and channels are a great clue, because the first pullback creates the spike and channel entry zone, right? Or the trap zone. So obviously buyers are looking for shallow pullbacks. I'd love to get a deeper pullback on this. We'll see if we can get it, right? And then obviously if the bears can hold this pullback, right? If they can hold it, if the bears can take control of this and hold it, right, they're going to want to take out that low. Now that's a big if, right? That's a big if right now. So we have quite a bit to talk about. I also want to talk about if we go higher here, right? So we're going to cover that later on in the video tonight. Let's start first by talking about the pullbacks, because there are really kind of two basic scenarios that you want to look for. One is the shallow pullback, right? Now, whenever we have a shallow pullback, my concern is buying too high, right? Now, we could definitely use a shallow pullback right now. It's very strong, right? That momentum is very strong. We haven't taken out those highs yet. So a shallow pullback is definitely possible, but I'm concerned with a shallow pullback. I don't want to buy too high. If we saw one thing last night, these earnings overnight can really produce some really big pullbacks, right? So if I want to take a shallow pullback, I need to use what's called a trap entry, right? We talk a lot about traps, right, in our free trading course. And so a trap entry, right, what you want to think about here is as we pull back, get into that buy zone, get those bears trying a couple times, right? And then look for that trap entry, because that's going to allow you to buy nice and low. Where's my target? Easy, right back to the high, and then leave that runner back to that big high, 40, 56 and 3/4. And I wouldn't argue with anybody who left a runner to really, again, to really rip. We've got some levels waiting up overhead here at that 40, 90 and 3/4. Very much potential if we do get this thing to keep on ripping. So a shallow pullback, look for that bear trap, right? That trap low, just like I talk about in the free trading course. Now, if we get that deeper pullback, the deeper pullback is great because it gives you a good risk reward ratio, small amount of risk for a bunch of reward. The challenge though is that with a deep pullback comes momentum. Anytime we have a good risk reward, you pay a price for that, right? It's not free. The cost is momentum. And so when we pull back now on this, what's going to happen is the bears are going to come in. They're going to see that big low down there, and they're going to try to throw the kitchen sink at this thing, right? They're going to try to force this thing back to retest the low. Let them dig their own grave. Let them try a couple times here, because then we can then plan our entry by using their stops. The easiest money you're going to make in a bull trend is waiting for a deep pullback. We're not trying to pick the bottom, right? That can be risky. It can be difficult to pick the exact bottom. I always wait for the bears to come in this example. Let them try a couple times, right? Let them kind of dig their own grave or wrap that noose around their neck, as we always say. And then right where those stops are, that's where I want to be looking for the entry, because in this area, the buyers are buying. And when the sellers get stopped out, the sellers have to be buyers as well. These can oftentimes produce some very strong rips going higher here. So a two-try failure, right? We talk about failure patterns a lot in the free trading course. It's a two-try failure. Now, one of my favorite follow-up trades on this is when it pops up and runs, is I can then go out and look for a new channel. Remember, the market wants to go back and take out that high right now, right? So if I can find a new channel by drawing off of those highs, bring it down off that low, remember, look left and grab the first test, right? The first test. Now, I love to look underneath prior swings, like I'm drawing on this, right, for a bear trap. But guys, this could be any of the entry patterns that you're learning in that free trading course, right? It could be a bear trap. It could be a seller failure like this one. It could be a pullback combo, a strength trade. You want to make sure you do it, though, before we test the high. All right, guys? Now, we've talked a lot about traps, failures, pullback combos, right? Drawing channels, spiking channels. Okay. All the stuff we cover in our free trading course. And I know most of you guys and gals are taking the free class. You're making money with these setups. But I know there's probably a few people here right now who haven't taken that free class yet. If you're one of the few folks who haven't taken that free trading course, I'll put a link up there for you in the upper right-hand corner. Grab that link, take the free trading course on our website, because the strategy that you'll learn in that video series will show you a remarkably simple trick to know where the winners are more likely to be that day, and I'll make it easy to start earning money with it. I'll teach you 4 different entry patterns to help kickstart you making money right in that free trading course. If you're missing the best trades right now, if you're not getting the results that you want, grab that link, take that free course. It is perfect for someone trying to make the jump into full-time trading. You'll learn lots of things, right? All the stuff we've talked about right here in this video so far. All right, so now we kind of know how to trade the pullback, the shallow pullback, right? And of course, the deeper pullback. At what point does this pullback become a reversal? It becomes a reversal once we pull back around some of these support levels, and the bears have to what? They have to hold the pullback, right? They can't try a couple times and fail. Remember, no. That's a bear trap, right? If they hold that pullback though and jump off that moving average, right? It'll rip right off that moving average. That's a bear market, right? And once we get that bear market, what do? We then draw a trend line off that low. We bring it up around that high, and we go find that first test off of that low. Right? Now, again, I'm going to keep it simple right now, right? Like this one, my favorites are bull traps, like in this example. But again, it could be a failure pattern, could be a pullback combination. And we saw one of these earlier, right? We took off to the downside, they pulled back, they ripped it lower. What do? You draw that channel right down off that low, you bring it right up off that high, and you don't miss that first test right off of that high. A great example today of how they ran it lower, retested, 1, 2, pop back up, and then where do you think all the buyers want to get in? Just guess. Oh, right there off that new channel. Again, if you watched last night's video, you were ready for quite a few ways to make money today. You're going to learn a lot more about stuff inside of that free trading course, right? So again, if we do go lower, we pull back and we blast running lower. Now we know where they're trying to go, right? We know they're trying to retest that low. Again, not what I expect to happen right now, but I have no crystal ball, right? I have no crystal ball. Now, here's a question for you. Once we find ourselves back off that low, or if we did find our way all the way down to that low, what do you think would be a good way to buy off that low? Well, let's think about what we talked about last night, right? If we find ourselves all the way down at that low, that does what? It'll be a hell of a lot of momentum. It'll be a lot of bearish momentum. We're still an overall bull market. There are 3 ways to make money if we take out that low. One would be a crown reversal. Let the bears try twice. Remember, when they go lower like this, right? When you see a real strong move down like this, they're going to want to retest that low, right? They're going to want to retest that low. So we have to give the sellers the benefit of the doubt. Let them try a couple times, and because of all that strength, we look for a trap, right? I call these crown reversals when we're trying to go against that trend, right? Bears try once, bears try twice. We call this the 2-try rule. You'll learn about that stuff, right, in the free trading course. That's one way to do it. We didn't get that today, right? What did we get today? Strong move down. No, they pulled back to the 21 moving average. They retested that low. What do we always say? Mission accomplished, right? Remember, they want to retest. Then, as I mentioned last night, the professionals are selling high. The rookies come in and they start selling into that low. Once those rookies try twice, and let me saw today, right? Sometimes it can be a little bit higher, right? Sometimes it could be a little bit higher, right? Like that. Once those bears try twice, though, we've already retested that low. Think about where their stops are and punch right into those stops, right? That's exactly why it flies higher, because you're trapping in those bears, right, after your retest. Okay? And then don't forget, right? Don't forget, if we take out that low, we retest the low, the bears try once, bears try twice, there's your 2-try failure setup, right? Using stops as fuel. If this thing rips and runs higher, what do? Do we chase after? No, we do not chase after it. What did you learn from here today? You draw a trend line off that high. You bring it off that low, and you don't miss what? You don't miss that first test. Right? You draw that trend line off those highs, bring it down to that low, and you do not miss that first test off of that low. Is it making sense? Right? So again, buying that first test, and obviously again, I'm keeping it simple right now by simply illustrating bear trap, right? Bear trap below that prior swing, a seller failure pattern. This is the 8,000 tick chart, right? You're not going to see the exact entry setups on this time frame, but drill down tomorrow morning in our trade room and you'll see them, right? So another easy way to do it, right, off of that low. On the rare occasion, we make a strong rip going lower, and then all of a sudden, right, we don't get the crown reversal back up. No, we don't get the retest and then back up. Sometimes what happens in these bull bias markets is we'll go lower like this, and there's so many buyers down here because, again, it's an overall bull market right now. The thing just rips and begins to grind and grind and grind. If that happens, why does that happen? Well, again, there's so many buyers down here, right? They're absorbing that whole entire move. When it rips and grinds like that, right? That grinder is just like we saw right here, where those are all the bears simply getting out, right? Those are not buyers buying high. Those are sellers saying, shoot, I'm getting out of the way of this. What do? We mark off that high. We mark off that low. We go find those prior swings, and we grab that first test. Again, my favorite are those bear traps, those failure patterns. And if we get one of those, that's pretty simple. Now we know where the market wants to go. It wants to punch out that high. So leave that runner. That could be a nice 10x, 15x paycheck on the way back up to retest the highs. Okay, so at this point now, I think we've got a pretty good idea here of how to make money on the shallow pullback, the deep pullback, the reversal, and possibly that double bottom. Now, this is a really good chance we go higher here too. We may not get that kind of dream scenario that I mentioned earlier. How do we trade this as we go higher, right? Because let's go to the NASDAQ here for a second. So the NASDAQ and the S&P are very, very similar, right? They have pretty much the exact same situation is going on right now, right? We've got this big bull market into a trading range. We're rotating down. And again, there's a lot of momentum now that tries to punch, right, going higher here. You have to be aware of where the market wants to go. The market wants to go up into that high. Right now, the NASDAQ is 1201 half. On the S&P, of course, right, it's not that high, right? It's this whole area right here, right, on the S&P. So that's the objective. And our job is to get into trades before we reach the objective. So as we go higher, right, as we go higher, I want you to think about a couple key setups as we go higher here. And we'll talk about a reversal off the high, but be aware, trying to sell a reversal off of this high is a very dangerous trade because, again, we're not a bear market. It's an overall bull market. Again, check the links in the description. You'll see why. It's difficult to make a case on the 4-hour, on the 60-minute of making this a bear market, right? I don't listen to the news. I know when the news is. I don't watch television. They're lying to us on the television. Trade the chart right now, right? Recession this, recession that. The chart right now is very bullish. So trade the chart in front of you. We've seen many examples this week already where you're overthinking it by looking at the news headlines and looking at all the television set stuff. Anyways, so as we go higher, I think first of all, if we keep grinding, right? If we keep grinding, not a lot changes. Not a lot changes. If we keep on grinding, I'd like to get that deep pullback, trap in those bears, and back up to retest, right? So if this thing keeps on grinding, just be aware of that kind of continuation off of that channel. I know it's kind of scary because we'll be right in the high, but one of the things we talk about in our trade room is I don't really care where I am on the chart. If I have enough bullish momentum, again, if we keep on grinding, I don't really care where I am in the chart. If I have enough bullish momentum, the odds are so good when you get that deep pullback, trapping those bears, it's almost a guarantee we go back to retest the high. So if we keep on grinding, I'll adjust that channel. Same thing goes for the S&P as well, right? SPY, QQQs, all the same stuff. Okay, so keep that in mind. Now, in addition to that, what would be a couple breakouts that we could look for as we're going higher? There are really 3 breakout patterns I would keep your eyes on. One is a 1, 2, 3 breakout. So we take out that high, we pull back to the moving average, and we simply jump, right? We blast off that 21 EMA, right? We stare that high right in the face, and the buyers say, no, we're not done. We're looking for that next leg higher, that rotation higher. Now remember, I'm not going to buy that pullback. Right? I will buy a much deeper pullback, right? A much deeper pullback. Why? Because again, we don't want to buy high. We want to buy low. That's where professionals are waiting. That's where I can get an edge to trap in those rookies who are trying to trade that reversal. I don't want to buy that aggressive, that short pullback right there, not into these highs. But if they're successful and they just rip it right through, what is that telling you? It's telling you the buyers want more. I don't know why they want more. I don't care why they want more. I don't care what the news can. It doesn't matter. It's irrelevant. All that matters is we're going higher. And at that point now, I'm going to mark off that high. I'm going to mark off that low. I'm going to drill down and look for that. And again, I'm going to keep it simple right now, that first test. Right? It's a first test because you're drawing off the highs, you're pinning off the low, and that's the first time it pulls back and hits it. And again, this could be a bear trap, right? It could be a seller failure, a pullback combo, right? The price action cycle that we talk about in the free trading course. Now, keep in mind, whenever we have breakouts, the first leg and the third leg are very symmetrical. First leg, third leg. And we get levels overhead, but there's a lot of open space. The next really big milestone overhead up here, 12,256. I mean, that seems like a lot to chew. That seems like a big bite to swallow for the NASDAQ here. Or the S&P. On the S&P, if I go back to the E-mini, I've got that 90 3/4, right? And we're wide open until we get up to that 41.54 there, right? So we get some levels we're waiting for. So again, use that first leg, third leg. So we pop up, we take out the high, right? We pull back to that 21 moving average. We jump, we rip, as I say in my trade room, we convincingly break through that high, right? Difficult to say we're not breaking through it. We mark off that high, we mark off that low, we drill down, we find that channel, we grab that first test. And again, in these examples, the first leg, right? That's your first leg. Third leg, the middle leg is always kind of the oddball. Sometimes it's bigger, sometimes it's smaller. Don't worry about that. Once we get the pullback, once we know the bottom is in, then we know how big that third leg is, and that will give you a chance to squeeze out every last drop of that target. As I always tell my students in our trade room, when you're going with the overall, in this case, bull bias, you owe it to your trade account, you owe it to yourself to leave a portion to run, use a trailing stop, because sometimes those things will really keep on going. And one of the easiest ways to make more money on your account is when you're in a good trade, let that good trade work for you, and that'll be an easy way to help you maximize those targets. Another way would be a pop and grind, right? We might pop up, right? Again, we might keep grinding, but we might pop up, start grinding, right? When that happens, what do? We mark off that high. We find those lows. We find those prior swings, and we grab that first test off of that low, right? And again, I'm not going to go over all the entry patterns right now. The video is already long enough, right? You guys will learn that in the free trading course. It's pretty simple stuff, okay? Remember, first leg is the pop. Third leg, that'll help you fine-tune the exit. Okay, squeeze out all that profit on that move. The other scenario I would kind of keep in mind would be we get earnings, and who knows, right? Maybe we really rip. Maybe this thing really takes off to the upside. If it really takes off to the upside, what you got to be careful with now is that we don't want to buy high, right? We want to buy low. And by definition, if this thing rips going higher, now we're kind of too high to buy. And one thing we learned from today's big collapse is there are buyers waiting for those deep pullbacks. So what I always tell my students is when you rip out through some of these levels, right? Some of these prior highs, start thinking about using those, right, as key support, right? What is resistance becomes support, and then wait for that nice deep pullback. Okay, how deep? Well, usually right when that little voice in your head says, oh my goodness, maybe this is a reversal, that's usually when it's deep enough. And we'll talk more about that tomorrow morning in the trade room. But most important thing is when it reverses like that, remember, anytime we see a strong move in one direction, there's one thing on their minds, and that's to retest the high. So how to get into that stuff? It can be difficult to pick the bottom on this, right? It can be difficult to figure out how low this thing can go. I mean, look what happened today, right? It kept going and going and going until we saw the retest and then the reversal. What I always do is try to go out and trap in some of those bears, right? Once those bears get short off that 21, now you've got their stops sitting right there like a sitting duck, right? And now you can go out and punch it back up to retest the high. So promise me, if it rips higher, don't chase after it. We're not trading FOMO, right? We're trading high percentage, low risk, high reward setups. That's exactly what this will give you, right? So strong, big move, right? Way too high up. We go out, we look at other prior levels below us. We go, okay, now give me that deep pullback. And again, these deep pullbacks, they're going to feel like reversals. And right when they start feeling like a reversal, bingo, that is usually when you're on the right track. Fine. What I'll do is I'll find some bigger channels tomorrow morning in the trade room, and we'll combine those channels right along with those entries. All right, guys? So keep that in mind as we go higher. Now, how would I sell off the high? How do you sell off the high? Remember, it's a very bull market right now. So the best way I'll be looking to sell off the high is a crown reversal is a gamble, right? A crown reversal in this situation is a gamble because you have all of that momentum and we're in an overall bull market. If this was an overall bear market, I could justify that reversal. Your best shot at calling a top on this is not to call a top at all. Let them take out the high, let them pull back and retest that high, and then let's see if we can get some rookies coming in and let them take the bait and then use their stops as fuel for that short back down. A lot of times that what we call a two-try failure off that high, remember, strong pop up, they're going to want to retest the high. That's not my favorite entry right there. right? I'm okay with not taking that trade. I'll wait for it to show me proof and then trade the breakout, right? We mentioned earlier. But if they struggle at those highs, all their stops now can be used as a catalyst. Remember, when you're going against all this momentum, you need some edge, right? You need some edge. The momentum is the biggest edge you can get as a day trader. If you don't have that momentum at your back, you're playing with fire unless you can use these. In this case, the buyers use their energy, use their stops to sell off of this high. And then as it shoots lower, right? If we get that shot going lower, this is where you can start looking for that new channel and start thinking about, okay, these lows over here, that becomes my next objective. And now look at that short off the top of that channel. And oftentimes these become one big trading range, right? So what'll happen is trapping the buyers double top, right? Double top reversal into that first test off that, right? Off that channel. Okay, be careful with these. Okay, be careful with these. It is very, very good chance it will rip and go through that high. So be very careful trying to short these things, but that's the way you want to think about calling a top in what could be a very big bull market. All right, guys? Boy, I really like the NASDAQ and the S&P game plan for tomorrow. We've had a really, really good last few days. Let's wrap things up here now on the oil. Oil is a pretty straightforward chart. Again, as I mentioned in the intro today, we have some fundamentals affecting this right now. Tomorrow, you may recall, we've got a couple airlines you might have heard before, right? American Airline, Southwest. I hear they still fly planes at Southwest. I think they still do. All kidding aside, we got energy companies. We got there's a lot of airlines, energy companies tomorrow at the open. So, I definitely can see how those could be catalysts. Again, I don't need that information, but that's definitely potential to really get this market moving here for tomorrow. And you probably heard from I can't say that. You probably heard from President Biden this afternoon. See, I caught myself, YouTube. You probably heard from President Biden this afternoon, right? Coordinating the tanks, right, going into Ukraine. It's some of the headlines I saw today, the quotes I saw today, sounded like they were pretty much taking on, escalating the war. So oftentimes a war escalation doesn't exactly mean, bad things for the price of, doesn't mean we're going lower very much. So we definitely have some fundamentals on the chart. But again, that's just speculation right now. That's just me having fun. I'm a human being. I'm curious about these earnings too. Don't get me wrong. I'm not some robot. I'm not a robot. I'm very curious about the world we live in and geopolitical stuff, right? I enjoy that stuff, but it has nothing to do with my trading. The most important thing right now is we are still overall bullish. Okay, look at a 4-hour chart. Look at that 60-minute chart I put in the description on oil. You can't look at that chart and say we're a bear market right now. And with the war drums beating and the airlines reporting tomorrow, potential for a big catalyst. So it's a range. The most important thing right now on the trading range is that ranges are magnets, but ranges love to rotate. Okay, so you'll notice how the market goes down, up, down, up, down, up, and then what should be happening right now is we should be going lower, right? We should be rotating back and forth from one side of this range to the other. Okay, so if we don't, the big question right now is if this thing goes higher and this bull channel that I've drawn, if that holds, that's a really, really we call this a failed rotation. Okay, you'll learn a lot about range rotation as a student of mine. Rotation is one of the biggest clues for price action traders about breakouts and reversals. So that failed rotation gives buyers a great shot to be a buyer going higher. It also tells us that I don't want to sell up there, right? If they fail this rotation going lower and they start going higher, I can't sell that, right? Because what is that fail? That's a very bullish clue. So right away, if we go higher, the only real option I have is buying breakouts. Right, things like 1, 2, 3 breakouts, right? Things like pop and grind breakouts, things like 2 try trap breakouts, right? Going higher, and we get a big juicy breakout target overhead at that 82.60 area, right? Now, if we go lower, it's a range. We've got a lot of support down here, right? At the range. In fact, if you look left a little bit, you can see we're still kind of hanging out right around those prior lows here. So even if we do go lower, I still think we've got some good bear traps down there. Now, as we go lower, remember, okay, good example. So this is a very short-term bear market, right? Bearish into a trading range. Okay, we can be both. We can be bearish in the short term, but bullish in the long term or the medium term, right? Okay, so we're bearish into a range right now. So as we roll lower, what is the short-term momentum? Sellers. So if I want to be a buyer off this, I have to absorb those sellers, absorb their momentum. If they go lower, I can't just try to pick a bottom. Right? It's not a safe trade. It isn't a high percentage trade. There's no edge. There's no edge there. What I have to do is try to trap in those bears, let them try a couple times, and then once those bears get trapped in, bingo. Now I've got some stops to use, and I can use that to give me that edge. So as we go lower, I love the idea of a bear trap, right? That 2-try failure, trapping those bears, and whoop, right back up into that trading range. We know at that point the bulls, of course, want to take out that high. So try to believe a runner, right? Remember, you never know how far these things will go. If we do rotate higher here and fail that rotation, again, take the high out, pull back to the moving average, jump out of this range right now. This becomes a new channel. Get rid of this here, Joe. Right, we pop up, they hold the pull. Remember, we're not going to buy that first pullback here. We wait for the breakout wide because we're still technically inside the magnetic pull of that trading range. For all I know, it could go up, trap in, and run right back down again. So I don't trust that breakout, but I do trust it once it punches. Once it punches, then we go out, find that high, find that low, right? As I mentioned last night, that's a 35 to 40% winner right there, right? That's a 75 to 80% winner right there. Which one do you want to build your career on? Which one do you think will be less stress, higher? Yeah, the 80% trade. It's a no-brainer, right? We have to get in the habit of knowing what a 35% trade looks like and not letting FOMO trade for us, because oftentimes you'll see stuff like this, where it'll look very convincing. You go, oh, I think we're going higher, but nope, it's a range, right back down in, right? So don't get caught trading those breakouts until you see proof. Wait for the 80% trade. I will gladly wait for the 80% trade because I've learned over the years, if I stay patient for those trades, right, you barely take losses. And the easiest way to grow your account is removing the losses, right? Anyways, so that's one way. We pop up, we grind. The grinder's easy, right? We mark off that high, we mark off that low, we drill down, we find those swings, and we grab that first test. Right? I like that. I like that one a lot. Okay. Keep an eye on those as we're going higher here. As we go lower, I'm not a huge fan of a breakout down here. There's not a lot of space to work with. We've got a big bottom down. You know, it's going to be difficult to find an easy way to get a strong enough breakout, right, to get a breakout, and then we're selling right into that low. I would much rather get that move lower, trap in the bears, and whoop, right back up again. That seems to be a much better trade on oil because, again, we have an overall bull bias. Now, remember, this could change. You know, we get some earnings. We get a lot of stuff going on right now that could affect oil, so we'll see how this chart plays out overnight. But I love the idea of those bear traps, those failures below the low, those breakouts going higher. Be aware of those key levels of support. If we really race going lower, right, crown reversal, double bottom, 2-try back up, right? Same stuff we talked about on the S&P. Like I said, everything we're talking about tonight can pretty much be applied to whatever market is your favorite market. So thank you so much for tuning in and watching all the way to the end. Now, the game plan is ready to go for tomorrow. Tomorrow morning, we're going to do it again. We've had a great week in our trade room. Hopefully, I'll see you there trading right along with us. We open up tomorrow, 8 o'clock Eastern Time. Again, I'll put all the important links, the description of the video here tonight, the free course links, the membership links, all the additional chart time frames. They're all there for you. Don't forget, if you have any questions or you have trouble with anything, right? The easiest way to get help is to call the office. We're always here. I know I go pretty fast on these videos. We'll slow it down, make sure you have all the pieces you need put together that we can start making money with us in our trade room as a member. Don't be afraid to use live chat, call the office. We're always here to help out with any questions you have along the way. All right, guys, hope you learned a bunch tonight. Boy, great video tonight. If you enjoyed it, make sure you subscribe, tell some friends about it, and hit me up in the comment section. I'd love to hear from you and what you guys love about this video. I'll keep it up for tomorrow. All right, guys, I'll see you tomorrow morning, 8 o'clock in the trade room. If not, same time, same place, back here tomorrow night, and we'll get ready for Friday's trading session 24 hours from now. All right, guys, make some money tomorrow. We'll see you guys tomorrow. As always, be well, be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.